Hello there, ACCA students. Steve Willis here. In this video, we're going to tackle a Section B question together. We're looking at question Volt from the March-June 2019 exam, and this is covering the topic of life cycle costing. Now, you can find this in the past exams. You can find this in your revision kit. You can also find this question in the link below. So, I would like you to pause the video now, give this question a try, and then restart the video and we'll solve it together. Welcome back. Before we do this question together, let's review the exam approach and some exam technique tips. Well, Section B, I suggest you do the Section B questions at the end. Start with Section A. Okay, the independent, short, objective test questions. Then you move to Section C and you do those long-form constructed response questions and end in Section B, okay, when you're fatigued and you're tired. Now, time management is critical. I'd like you to follow the rule of 1.7 minutes per question. So when you're in a Section B question, you've got 5 of these questions, okay? That means 2 marks per question. That means 17 minutes to do this set of 5 questions. Now, in every Section B scenario, you're going to get 5 questions based on this short scenario. And there should be a balance of easier and then more difficult questions. It's important that you check all of these questions first. Now, you'll be doing this in the computer-based exams, right? So you're going to have to scroll through the screens and check each question. So I'm checking out 16 is a calculation question. Those can be a bit tricky. 17 is a theory question, looking at the statements and evaluating the statements. I like 17. I like 18 is theoretical. 19, look at this, we're getting into some kind of a pricing question, and then 20, another theoretical question. So I'm going to do that exact same thing in the real exam. I'm going to scroll through each screen, and I'm going to do the easier theory questions first. Okay, so let's do that exact thing together now. So let us start with question 20, a classic evaluate the statements. And what are we checking? Which of the following are benefits of life cycle costing for this specific organization? Okay, now, sometimes it's easier to eliminate the distractors, the obviously wrong answers. Okay, so I'm looking here and I see statement 4. It just jumps out at me as incorrect. It provides useful data for short-term decision making. Guys, short-term decision making is marginal costing, is relevant costing. Okay, so 4 is no good. Now, I'm going to jump to statement 3 because that's jumping out at me again as wrong. It gives a better understanding of the causes of overhead costs. Guys, if we are looking at overhead analysis, we're looking at the evolution of absorption costing, which is activity-based costing. So they borrowed benefits of different costing approaches. So as you prepare for your exam, really carefully look at the distractors and put yourself in the mind of the question writer. Every distractor should be plausible somehow, right? So an easy way to make these questions is to pull, the wrong answers from other costing types. So we see what the question writer is doing here with statements 3 and 4. Now, it facilitates, I'm looking at statement 1, the designing out of costs at the development stage of the life cycle. That is a benefit of life cycle costing for Volt. If we design out the costs earlier, that's cheaper than changing our approach after we are in development, after we are in production. Okay, so 1 is good. We keep 1. it can encourage better control of operating costs over the life cycle thing. Yes, that is good. Okay. And in this style of question, answer, guys, is B. And in the objective test questions, guys, in the CBEs, they may give you just true or false for each statement. So you be ready to evaluate each statement independently. Now, if we look at the question as it is written here, starting over, guys, look at this. We know that 4 is incorrect, so now we can start eliminating anything with a 4. Okay, then we have 2 and 1, okay, are common to A and B, so now it's only evaluate 3, and okay, A would then go out, B is the correct answer. But they might not give it to you this way in the computer-based exams, so be ready to evaluate each statement on its own. Let's do question 18 together now, and we are looking at environmental management accounting, the categories of cost here, and we're doing 18. These categories are borrowed, okay, from quality costs. If we look at options A and B, prevention and detection, these are called the conformance costs, if you remember that. And those are the costs associated with avoiding waste, with avoiding pollution, with avoiding any harm to the environment. Prevention costs, that would be any kind of an installation of any kind of new waste management devices, scrubbers, anything like that. Detection cost would have to be anything about monitoring, any kind of a cost related to monitoring, okay, the environment or any stage of production. So how would the disposal of spent nuclear fuel, guys, that's an output, isn't it? So it's not going to be the prevention cost, and it's nothing about detecting. So I'm liking C and D better. If it's going to be external failure, that would be costs related to some kind of an accidental discharge of radioactive waste, accidental, and it might be discovered by external stakeholders of the company, and that might also be something like oil spill cleanup. So I'm not liking this because there's no mention, guys, of unexpected output of waste. So we're disposing spent nuclear fuel. Best option, internal failure costs. Okay, that is a cost related to processing of waste. However, it has not harmed the environment yet, and it's not unexpected. It hasn't been discovered, okay, by the community. So C is the best answer in this situation for question 18. Let's do 17 together. Which of the following will decrease the total life cycle cost of the nuclear power station? Not the unit, but the total. Okay, so if we increase the useful life of the station, that means we're adding more years to its operation. We're going to increase the operational costs. Every year we have operating costs. So 1, it's not going to decrease the total cost. Okay, reducing the decommissioning cost. Well, if we reduce the decommissioning cost, okay, we spend less money at the end of the life cycle shutting down the plant. That will reduce the total cost of that nuclear station. So I'm liking answer B, 2 only. All right, so we've cleared the 3 easier theoretical questions, and either you know the theory or you don't, so you can then take a guess even if you didn't know it. Now, at the end of our 17 minutes, we're going to now attempt the numerical parts. And if we run out of time, we're going to stop what we're doing and we're going to go to the next section B scenario. Let's do 16 together. What is the life cycle cost per gigawatt? Cost per gigawatt. So let's recognize it's something over something. Life cycle costs, that will be all of the costs associated with developing, producing, and shutting down this nuclear station, divided by the total gigawatts that will be produced over that life. Okay, so we got to get two things here. Now, if we go up to the scenario, let's find the costs. We're only talking about the nuclear station, guys. And we see that the nuclear station will operate for 40 years. And the operating costs are $486 per year. Okay, so 40 times 486 will be the life cycle operating costs. Okay, these operating costs include a provision for depreciation. Okay, that's in there already, so we don't have to add that. Okay, that's covering, right, the $7 billion of building that station. Okay, and then we have the decommissioning costs here. Okay, so we've got to add those decommissioning costs to the operating costs. Now, we need to divide that total cost by 9,000 gigawatts multiplied by 40. So guys, that's the arithmetic that we'll need to use to solve this question. Let's do the math together. And let's be clear, we're going to be working in millions. And we'll then convert that millions to the thousands that they're looking for. Okay, so if we look at the total life cycle costs, we've got the 486 million multiplied by 40 years plus the 12 billion in decommissioning. That's a 112 and the 3 zeros. Okay, and that would be divided by the 9,000 gigawatts multiplied by 40 years. Okay, so there we go. Those are the figures, and our result then is 87,333. Okay. So the closest answer then is C, 87 million, or so the answer will be 87 Let's do the math together. Let's do the math together. First step, let's get the total life cycle costs. So we've got the operating costs, 40 years, multiplied by 486 million, and we're working in some country dollars to the million. Let's be clear there. Okay. Okay, plus that 12 billion in decommissioning costs. All of that divided by the gigawatts. And we've got 9,000 per year multiplied by 40. So that equals 0.0873 million, or we put that into thousands, 87.333 thousand. Answer, guys, to the nearest thousand is C. Not so bad, actually. Let's end the scenario, guys, with question 19, another mathematical exercise. And if Volt uses a margin of 40%, okay, to set their selling price, what's the total profit, lifetime profit per station? Okay, so we need to get the revenue, then we get the costs, then we can get the profit. So the template that we'll need to use to to tackle question 19, we're going to need to get some selling price, and I'll just use the letter P to abbreviate a price, okay? And then from that we will subtract, okay, a cost, and that would be the lifetime profit per gigawatt, okay? So in order to do that, though, we've got to do a little working on the side to get that selling price. And the question states they use a margin of 40%. So I'm going to use this approach. We'll do it in percentage terms first, and we get sales, and then cost of sales, and then some profit. Okay? In percentage terms, we put 100% at sales, okay, when we're looking at margin, okay? And if the profit margin is 40% of the sales, the cost is going to be 60%. So they tell us that that cost per gigawatt, guys, is 40,000. So I can put the monetary units there in that column, and now it's simple algebra, solving for x. 40 multiplied by 100 divided by 60. It's the same thing as 40,000 divided by 0.6. Okay, so that will come to 66667. Okay, solving for x. 40,000 divided by 0.6. Now, the cost per gigawatt is 55 from the question. Okay, so the profit per gigawatt then is going to be 11,667. But we want it over the life. So how many gigawatts are we doing per year? That's 1750. How many years will we be in operation? That's 20 years. Multiplied by the profit per gigawatt, the 11,667, multiplied by 11,667. And guys, that gives me 408 and some change. They want the answer in millions, so the answer, guys, is B, 408. There you have it. Question volt from the March-June 2019 exam.